Good morning, it's Joe Neighbour from Signal Centre. This is the latest roundup on foreign exchange markets from a technical perspective. Just a quick run through the latest headlines impacting markets today. So overnight, or yesterday, we had the Federal Reserve policy decision. The Fed statement was in line with expectations, but there were notably more hawkish rhetoric tones from the Chair Powell, with a warning of potential rate hikes at every meeting from March. US yields moved higher off the back of that, and the dollar posted strong gains following Powell's comments with a 6-week high. Euro US dollar dipped to 2-month lows at around about 112.10, and sterling overall was quite resilient but did drift a little bit lower against the US dollar. So let's dive into the charts now and have a look at how that has impacted things from a technical perspective. First and foremost, we've got the dollar index up on the chart. So this continues to trade within a bullish channel, as you can see here, highlighted by these yellow bands. We did see a corrective move to the lower end of the channel and what looked to be maybe a breakout to the downside of the channel back in mid-January. But if we scroll further to the left, we can see this previous high here from September has acted as a fine level of support. If anybody had bought that dip into that region there, that would have been a spectacular entry point for anybody looking to get long of the dollar index. From there, we've continued to see prices move to the upside, and yesterday we can see a really impulsive move higher, as we said, talking about a 3-month high here in the dollar index, and today we have continued that theme. We've actually gapped to the upside on the dollar index from the 10 a.m. close last night to the following session, and we're very close now to the highs that we posted back in November last year. So this is a 96.94. If we can get above that level, then that would continue to signify strength in the dollar index, and we'll be looking for higher prices over the medium term. The next resistance level to target on the upside is at 97.72. This is relevant because, well, for one, we've got it as a double bottom measured move target at 97.68. But also we've got it as a 61.8% Fibonacci retracement level from this entire move at the height of the pandemic down to the lows that we posted in January last year, and the 61.8 comes in at 97.72. So that's a really decent level to target on the upside for the bulls that continue to obviously be on the front foot when it comes to the dollar index. So conversely, looking at Euro US dollar, as you'd expect, given the strength in the dollar index, we have seen a move to the downside in Euro US dollar. And this isn't totally unexpected. We've been talking about for many months this head and shoulders top pattern that completed back in sort of July, August time last year. Since then, we've seen prices continue to be contained by this downtrend resistance line. In recent weeks, we have seen prices consolidate within a corrective channel, but we've now seen that break to the downside and firmly take out that 113.00 support level that had begun to form. Yesterday we saw a really impulsive move lower, and much like the dollar index today, we're seeing continued momentum on the downside, this time with Euro US dollar, obviously upside on the dollar index, and we are pretty close now to the lows that we posted in November. So this may act as a bit of support. This level here, which is at 111.86. But for us, we're looking for a continued move to the downside towards our measured move of this head and shoulders top pattern, which comes in at 110.58. And below that, we're looking for this blue line, which is a 78.6% Fibonacci retracement level of this entire move here, from the lows that we posted in the pandemic in 2020 to the highs that we posted at the beginning of 2021. So this zone here that we've highlighted really could attract some attention, either short sellers looking to cash out and take their profits, or maybe some speculative buyers stepping in here, knowing that this is an important technical level and maybe looking for a bit of a bounce to take shape. Either way, at the moment it looks bearish. We've got some mild support to consider at 111.86, but if that gets taken out, then I think we are still looking for lower prices down to that 110.04 level. So finally, going to have a quick look at cable. That continues to reject from the 50% Fibonacci retracement level at 137.05, which was from these highs here that we posted in June last year, down to these lows that we posted in December last year as well. And as you can see, the selling pressure has been quite unrelenting over the last few sessions. We posted selling yesterday, and we've backed that up with further selling today, taking out the lows of the last couple of sessions. So it doesn't appear to be any let up in the selling sterling at the moment. Obviously, this is being driven primarily by dollar strength at the minute. And while the dollar continues to be on the front foot and looking pretty strong, I think we're going to continue to see lower prices in sterling versus the US dollar. So hopefully that was useful for anybody watching and will help you position your FX trades accordingly. I'll be back next week with some more FX roundups for you all, but until then, trade safe, everybody. Goodbye.